Have you ever watched a stock explode 200% or more after you sold it for a measly 10% gain? That sinking feeling in your stomach, that painful realization that you left life-changing profits on the table. If you're nodding right now, I promise you're not alone in this frustrating experience. What if I told you there's a single candlestick formation so powerful, so revelatory, that it could transform your entire approach to trading? A pattern that doesn't just hint at potential movement, but practically screams that an explosive trend is about to unfold. You see, there's a fundamental truth about the markets that most traders never fully grasp. The real wealth, the kind that transforms accounts and changes lives, isn't made in those tiny daily fluctuations that most people obsess over. It's created in those massive, sustained price movements that carry assets far from their starting points. These aren't just ordinary price increases. They're wealth-creating tsunamis for those who know how to spot them early using specific candlestick patterns. Has this ever happened to you? You spend hours analyzing charts, looking at countless indicators, reading financial news, only to miss the forest for the trees. While you're busy tracking every minor wiggle in price, the real opportunity, the explosive trend, begins forming right under your nose, signaled by a specific candle formation that you didn't recognize. The harsh reality is that most traders are systematically trained to fail by focusing on exactly the wrong things. They're hypnotized by minute-by-minute fluctuations, seduced by market noise, and distracted by the constant chatter of financial media. Meanwhile, the true wealth builders are quietly positioning themselves for explosive trends, using time-tested candlestick patterns that have signaled major moves for generations. What you're about to discover might completely transform how you approach the markets. I'm going to reveal a candlestick formation so reliable in identifying emerging trends that professional traders have relied on it for decades. This isn't about complicated technical indicators or expensive trading software. It's about recognizing a simple yet powerful pattern that appears right before many explosive moves begin. Stay with me until the end of this video, because I'll show you exactly how to identify this pattern, when to enter, and most importantly, how to develop the discipline to ride these trends to their full potential. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Imagine being able to look at a chart and instantly distinguish between meaningless market noise and the birth of a genuine explosive trend. Think about how transformative it would be to possess the skill that lets you position yourself ahead of the masses who will inevitably pile in later, driving prices even higher. This isn't about predicting the future. It's about reading the present with a clarity that most traders never develop. The hidden truth that transformed my own trading journey was this: the most powerful market signals aren't hidden in complex algorithms or expensive trading platforms. They're right there in plain sight, embedded in the candlestick patterns that form on your screen every single day. This revelation completely shifted my mindset about what really matters in trading. You see, we're naturally drawn to complexity. There's something seductive about intricate technical indicators, complicated trading systems, and sophisticated algorithms that promise to decode the market's secrets. But behind the scenes of every successful trading career lies a profound simplicity. The ability to recognize specific candlestick formations that have been signaling major market moves for generations. This powerful candle pattern we're discussing today has been leaving its footprint on charts since the days when Japanese rice traders first began documenting price movements. Its relevance hasn't diminished over centuries because it captures something fundamental about market psychology: the shifting balance of power between buyers and sellers that occurs right before explosive trends begin. The impact of understanding this pattern can be transformative. While others drown in data overload, analyzing dozens of indicators that often contradict each other, you'll develop the clarity to see what really matters, the story being told by price action itself through this distinct candle formation. Consider this for a moment. Every day, the market generates an overwhelming amount of information. Price movements, volume fluctuations, news events, analyst opinions, social media chatter. The journey toward trading mastery isn't about consuming more of this information. It's about developing the discernment to filter out the noise and focus solely on the signals that matter. This candlestick pattern acts as your filter. When it appears on your charts, it's like the market is whispering its intentions directly to you. While others remain distracted by market noise, you'll notice this quiet signal that frequently precedes explosive moves. The decision to focus on this simple yet powerful pattern rather than an array of complex indicators doesn't just improve your trading results, it transforms your entire trading experience. The mental clarity that comes from focusing on what truly matters brings a sense of calm confidence that's impossible to achieve when you're constantly juggling multiple indicators and second-guessing your analysis. Now, I want to go even deeper into this topic by exploring the psychological dimension of trading explosive trends. Because spotting this powerful candle pattern is just the beginning. The real challenge, the one that separates the average trader from the exceptional, is having the conviction to act on what you see and the discipline to stay with the trend once you've entered. If you've ever felt overwhelmed by the complexity of technical analysis or found yourself paralyzed by information overload, write "simplicity wins" in the comments below. I'm curious how many of you have already begun to realize that less is often more when it comes to successful trading. Think about it. We've all experienced that moment of clarity when we recognize a promising candlestick pattern forming on our charts. The research aligns, the technical signals confirm, and we make our move with confidence. But then something fascinating happens in our minds. The moment we have skin in the game, our psychology shifts dramatically. Each price fluctuation becomes personal. Each temporary pullback triggers our fight-or-flight response. And that's precisely when most traders make their fatal mistake. They exit too early. This psychological transformation isn't just a trading issue, it's a profound mindset challenge that affects every aspect of our decision-making process. Behind the scenes of every successful trade lies this uncomfortable truth. The path to substantial gains is never linear. It's filled with moments of doubt, periods of stagnation, and frightening pullbacks that test your resolve. The revelation that changed everything in my trading journey was understanding that these emotional responses aren't flaws in our character. They're hardwired into our biology. Our brains evolved to protect us from danger, not to help us maximize profits in financial markets. When you recognize this, you can begin to develop strategies to overcome these natural limitations. Consider the power of this specific candlestick formation we're discussing. When it appears and signals the beginning of a potential explosive trend, it doesn't just provide a technical entry point, it gives you a psychological anchor during the inevitable turbulence that follows. Instead of being thrown off course by every price fluctuation, you can return to the clarity of that initial pattern and the edge it provides. The market is always right. Always. It doesn't care about your opinions, hopes, or fears. It moves according to its own internal dynamics, a complex interplay of countless forces that no single individual can fully control or predict. The traders who argue with the market, who insist that prices should move differently, are fighting a battle they cannot win. They're imposing their expectations onto a system that operates by its own rules. If you want more insights like these on identifying explosive trends with powerful candlestick patterns, hit that subscribe button now. I'm constantly sharing strategies that most traders overlook until it's too late. The transformative insight comes when you flip this perspective entirely. Instead of trying to bend the market to your will, you align yourself with its momentum by respecting what the candlestick patterns are telling you. This isn't about surrendering your analysis or becoming passive. Quite the opposite. It's about developing the wisdom to recognize reality as it is, not as you wish it to be. When you see this powerful candle formation signaling a potential explosive trend, you position yourself alongside it rather than against it. You become like a surfer who understands that fighting the ocean's power is futile, but riding its waves can carry you further than you could ever go by swimming alone. The impact of this mental shift cannot be overstated. Let me share another dimension of this journey that completely changed how I approached trading psychology. The relationship between conviction and patience, two qualities that are absolutely essential for riding explosive trends to their full potential. If you've ever felt that internal battle between what your analysis is telling you and what your emotions are screaming at you to do, write "mind over market" in the comments. I'd love to know how many of you recognize this psychological struggle in your own trading. Let's talk about one of the most transformative revelations in my trading journey, something that completely shifted my perspective on market timing and entry points. For years, I was obsessed with buying at the absolute bottom and selling at the perfect top. I thought this was the hallmark of trading mastery, the ultimate goal every trader should aspire to. I couldn't have been more wrong. This perfectionist mindset isn't the approach of a strategic investor. It's the mentality of a gambler. Think about it. When you're fixated on catching exact tops and bottoms, you're essentially trying to predict the unpredictable. You're playing a game of perfect timing in an imperfect world, and this pursuit of perfection becomes the very obstacle that prevents consistent profitability. The watershed moment in my development came when I embraced a fundamental truth. The powerful candlestick formation we're discussing doesn't promise to identify the absolute bottom. What it does, and this is far more valuable, is signal when a genuine trend has established a clear direction. It shows you when the odds have tilted dramatically in your favor, which is exactly when you should be taking action. Imagine a train leaving the station. At first, it moves slowly, gathering momentum. Then it reaches cruising speed, moving powerfully and consistently. Eventually, it begins to slow as it approaches its destination. The genius strategy isn't trying to jump on while it's still at the platform, too risky, or waiting until it's nearly stopped, too late. The optimal entry is when the train is clearly moving in a defined direction but still has most of its journey ahead. This brings us to what I call the fat, juicy middle strategy, a decision framework that completely transformed my trading results. The real money isn't made at market extremes. It's made in that substantial middle portion of a trend where the direction is clear and the momentum is strong. This is precisely where our candlestick pattern excels, identifying this optimal entry point where the risk-reward ratio tilts dramatically in your favor. Behind the scenes of every successful trade is this counterintuitive wisdom. You don't need to be perfect. You just need to be present for the most profitable part of the trend. This revelation liberates you from the paralysis that comes with trying to time markets perfectly, opening the door to a much more sustainable and profitable approach. Think about how this impacts your journey as a trader. Instead of agonizing over whether you're getting the absolute best price, you focus on confirming that a genuine trend is underway through reliable candlestick signals. You accept missing the first 10 to 15% of a move in exchange for greater certainty, and you're content to exit before the absolute top, knowing that the middle portion is where the greatest profits with the least stress are found. This connects directly to another crucial mindset shift that changed everything for me: embracing uncertainty as an intrinsic part of the trading landscape. Many traders operate under a dangerous illusion that they can achieve complete certainty before taking action, but the market never provides such guarantees. If you found yourself stuck in the perfectionist trap of trying to catch exact tops and bottoms, write middle path trader in the comments. I'm curious how many of you are ready to focus on capturing the substantial middle rather than chasing the elusive extremes. Here's the uncomfortable truth that transformed my approach to trading. Uncertainty isn't something to be eliminated, it's something to be embraced. Many traders operate under a dangerous illusion that they can achieve complete certainty before taking action. They want guarantees, assurances and promises that their trade will work out, but the market never provides such certainty, ever. What the market does provide are signals, hints and indications through specific candlestick formations that reveal the shifting psychology of participants. And this is where the power of our candlestick pattern becomes truly evident. It doesn't eliminate uncertainty, but it gives you an edge within that uncertainty, a glimpse into the probable direction of price based on the historical reliability of this formation. The personal transformation happens when you stop seeing uncertainty as your enemy and start recognizing it as the very foundation of opportunity. Without uncertainty, there would be no mispriced assets, no divergent opinions about value, and ultimately no profit potential. Your competitive advantage comes not from eliminating uncertainty, but from becoming more comfortable operating within it than other traders. Join our community of trend-focused traders by subscribing right now. I share these market insights exclusively with subscribers who understand that catching big waves creates more wealth than chasing daily ripples. This journey isn't just about changing how you trade. It's about changing how you perceive risk, opportunity, and your own relationship with the unknown. When you recognize a powerful candlestick pattern forming on your chart, you're not receiving a guarantee. You're receiving an invitation to participate in a potential trend with favorable odds. Now, I want to go even deeper into this topic by exploring another revelation that completely changed my trading results: the profound power of patience. We live in a culture that celebrates busyness, that equates action with progress. The trading world amplifies this misconception tenfold. We're bombarded with real-time data, breaking news, and platforms designed to make trading as frictionless as possible. The underlying message: trade more to make more. But behind the scenes of truly successful trading lies an uncomfortable truth. The most profitable periods often involve doing nothing at all. Once you've identified a powerful trend through our key candlestick formation and positioned yourself correctly, your greatest edge becomes your ability to sit still while that trend develops. This patient inaction, this deliberate stillness, runs counter to our psychological wiring. The transformation happens when you realize that trading isn't about keeping busy. It's about being right and then having the discipline to let that rightness compound over time. Some of my most profitable trades weren't the result of clever entries or perfect timing. They came from simply refusing to exit positions that were working exactly as anticipated after I identified the candlestick pattern that signaled the beginning of a significant trend. Think about this. Have you ever sold a position for a quick 15% gain only to watch it continue climbing to 50%, 100% or more? That wasn't a failure of analysis. It was a failure of patience. The intellectual journey from understanding this concept to embodying it represents one of the most challenging aspects of trading psychology. If you've experienced the struggle between your desire to take action and the discipline required to simply let a winning trade run, write "patient prosperity" in the comments. I'd love to hear from those of you who recognize that sometimes the hardest thing to do in trading is nothing at all. Now let's explore another revelation that completely changed how I view market movements. Markets never move in straight lines. Never. They advance, pull back, then advance again in a natural rhythm that tests both bulls and bears alike. These fluctuations aren't random. They're intrinsic to how markets function, a reflection of the ongoing dialogue between buyers and sellers. Every significant trend will experience periods of consolidation and correction that shake out the timid, punish the impatient, and test the conviction of even the most committed traders. The market seems almost designed to separate you from your positions before the biggest moves occur. This is where our candlestick pattern becomes especially valuable. It doesn't just help identify the beginning of a trend. Specific variations of this pattern often appear during these pullbacks, giving you critical information about whether what you're seeing is a healthy correction or an actual reversal. The transformation in your trading journey begins when you develop the discernment to distinguish between these two scenarios. A correction is the market taking a breath within a continuing trend. A reversal is the market changing its mind about direction. They may look similar in their early stages, but they lead to dramatically different outcomes. Here's the hidden truth that changed my entire approach. Most traders exit during perfectly normal corrections, mistaking temporary weakness for trend failure. They react to price action without context. But price movements only gain meaning when viewed through the lens of overall trend structure and the story being told by specific candlestick formations. When you understand that pullbacks are not just normal, but necessary for healthy trend development, your entire relationship with market volatility transforms. Instead of fearing these retracements, you begin to anticipate them as natural pauses that ultimately strengthen the primary trend. You might even welcome them as opportunities to add to your position at more favorable prices. The impact of this understanding extends far beyond individual trades. It reshapes your entire trading identity. The real mastery lies in developing an almost intuitive feel for trend dynamics, knowing when a pullback is offering a potential entry opportunity and when it's signaling genuine weakness. This comes not from formulaic rules, but from immersing yourself in the market's language until its patterns become second nature. Now, let me share a truth that fundamentally altered my perception of what creates trading success. For years, I believed that superior intelligence and analytical skills were the primary determinants of profitability. I studied complex indicators, devoured market theories, and built sophisticated analytical frameworks, all in service of making smarter trading decisions. Then came the revelation that completely reshaped my understanding. Emotional resilience matters far more than raw intellect in determining trading outcomes. This insight wasn't immediately obvious. It emerged slowly through painful lessons and honest self-reflection. During significant market movements, the greatest challenge isn't identifying the candlestick pattern that signals opportunity. It's maintaining your conviction when everything around you seems to be falling apart. If you've noticed how emotions tend to hijack your trading decisions despite your best analysis, write emotions over Intellect in the comments. I'd love to hear from others who've discovered that mastering your psychology is often more important than mastering technical analysis. Let me share another liberating truth that completely changed my trading journey. You don't need to be right on every trade to be extraordinarily successful. In fact, you can be wrong more often than you're right and still generate substantial profits if you structure your approach correctly. This revelation transforms how you view trading entirely. The hidden mechanism behind this counterintuitive outcome is maintaining favorable risk-reward ratios. Our specific candlestick pattern helps facilitate this by providing clear entry points with natural stop-loss levels, allowing you to define your risk precisely. When you keep your losses small and allow your winners to run significantly, the mathematics of trading shift dramatically in your favor. Think about this. Even with a modest 50% accuracy rate, you can build remarkable wealth if your winning trades generate 5 times larger profits than your losing trades cost. This insight catalyzes a powerful mindset transformation. Rather than obsessing over being right on every trade, you focus on the quality of your decision-making process and the asymmetry of your potential outcomes. Behind the scenes, this approach creates a psychological freedom that paradoxically improves performance. When you know a single loss can't significantly damage your capital, when you understand that your methodology doesn't require perfection to succeed, you trade with greater clarity and conviction. The pressure to be right diminishes, allowing your analytical capabilities to function optimally when identifying our key candlestick formation. Now, I want to go even deeper into this topic by exploring another insight that transformed my entire approach to market analysis. Explosive trends don't appear randomly. They develop from underlying conditions that gradually manifest in specific candlestick patterns if you know what to look for. Think of markets as having their own language, a complex, nuanced dialogue that most participants never truly learn to interpret. Behind every price movement is a story being told about accumulation, distribution, supply, demand, and the subtle transfer of assets from weak hands to strong ones. Our candlestick formation is like a punctuation mark in this ongoing narrative, a visible manifestation of an important shift in the balance of power between buyers and sellers. The revelation comes when you realize this language can be learned, interpreted, and acted upon before the obvious moves occur. I spent years watching price action, not just trading it, but studying it like an anthropologist might observe a foreign culture. I wanted to understand the patterns, the rhythms, the hidden signals that telegraph major moves before they become apparent to the average participant. This immersive journey revealed something profound. The market speaks clearly to those patient enough to listen. Consider how institutional money moves into a position. It doesn't happen all at once. That would immediately drive prices higher, working against their own interests. Instead, these sophisticated players accumulate positions gradually, often using pullbacks as opportunities to add to their holdings. This creates distinctive footprints in price action, periods of accumulation, subtle changes in volume patterns, tests of support that hold despite bearish news. And most importantly, it often culminates in the exact candlestick formation we're discussing today, a visible manifestation of this accumulation phase reaching its conclusion. If you've started to notice these subtle market signals and patterns forming before major moves, write "market whispers" in the comments. I'm curious how many of you have begun developing this deeper awareness of the market's language. Now, I want to explore a principle that dramatically changed my perspective on market opportunities. There's a fundamental truth that separates consistently profitable traders from the perpetually struggling. The most significant profits don't come from following trends. They come from positioning yourself ahead of the crowd. Consider this revelation. By the time a trend becomes obvious to most market participants, the most lucrative portion of the move has already occurred. The masses only recognize opportunities after they've been substantially developed, when the headlines are blaring, when the story is already being told. But at this point, the risk-reward equation has shifted dramatically against you. This is precisely where our specific candlestick formation creates its most powerful edge. It often appears during that critical juncture when smart money has completed its accumulation phase, but before widespread recognition has occurred. It's like a doorway between the early uncertain stages of a trend and the explosive momentum phase that follows. This insight sparked a profound transformation in my approach. Instead of waiting for confirmation from the majority, I began developing the courage to act on what this candlestick pattern was telling me, especially when it diverged from popular opinion. This path of independent thinking isn't easy. It requires intellectual honesty, conviction, and the resilience to stand apart from the herd. Behind the scenes of every significant market move is this undeniable pattern. Smart money accumulates positions early, the trend develops gradually, and only then does public awareness explode. By positioning yourself alongside the early subtle signals before widespread recognition, you enjoy both better entries and the psychological advantage of riding the wave of later participants. The awakening moment comes when you realize that consensus is rarely profitable. The crowd's enthusiasm is often a lagging indicator, not a leading one. The newspaper headlines, the trending social media topics, the taxi driver offering stock tips, these are usually signals of a trend's maturation, not its inception. Now let me share what may be the most illuminating market metaphor I've encountered. One that completely reframed how I view trading opportunities, the distinction between ripples and waves. The market contains both minor ripples, the daily fluctuations that captivate most traders' attention, and major waves, the significant trends that create life-changing wealth. Ripples are noisy, unpredictable, and ultimately insignificant in the grand scheme. They're the constant chatter of price movement that keeps most traders perpetually distracted. Waves, by contrast, start quietly, gather momentum gradually, and eventually carry prices far from their starting points. The decisive insight is this: a trader who successfully identifies and rides just a few major waves through our key candlestick pattern will dramatically outperform someone who spends years frantically chasing ripples. This isn't theoretical, it's a mathematical certainty. The cumulative impact of capturing a handful of significant trends far exceeds the combined result of hundreds of small scalps. This realization triggers a profound evolution in how you allocate your most precious resources, your time, attention, and capital. The true transformation comes when you embrace what might seem counterintuitive, trading less frequently, but with greater conviction. When you do trade, often leads to superior results. If you've noticed yourself getting caught up in market noise rather than focusing on significant trends, write "Wave Rider" in the comments. I'd love to know how many of you are ready to shift your focus from constant activity to meaningful opportunity. The framework I've shared with you today isn't just theoretical, it's the distillation of hard-won wisdom that transformed my own trading journey from frustration to consistency. Learning to identify and ride explosive trends through this powerful candlestick formation while ignoring daily noise has been the single most transformative shift in my approach to markets. What I find most fascinating is how these principles extend beyond trading into other areas of life. The ability to distinguish signal from noise, to act with conviction when opportunity presents itself, to maintain patience when everything around you screams for action. These are universal skills that create extraordinary results in any endeavor. I created this channel specifically for people like you, thoughtful individuals who understand that real success comes not from shortcuts or hacks, but from developing genuine mastery. Each week, I break down these transformative concepts into practical frameworks you can implement immediately in your own trading. If this approach to trading resonates with you, this focus on quality over quantity, on meaningful trends over market noise, I'd love to have you join our community. Hit that subscribe button so we can continue this journey together. The conversations we're having here go deeper than typical market analysis, exploring the psychology and discipline that separate exceptional traders from the average. If today's message spoke directly to you, drop Trendmaster in the comments. I'm always fascinated to connect with others who recognize the power of these principles, and if you found value in today's exploration, giving the video a like helps others discover these ideas too. It's a simple way to support the channel while helping fellow traders elevate their approach. There's a video right here that explores how to maintain emotional discipline during market volatility, the perfect companion to today's discussion about identifying trends. Click and continue with me over there to discover how these principles work together to create a complete trading framework. Until next time, focus on the waves, not the ripples. The real opportunities are hiding in plain sight.